today's Ecolomondo Corporation shareholder update. My name is Colby Mintram from Volt Strategic Partners. Ecolomondo is publicly listed on the Toronto Venture Exchange, trading under the symbol ECM. Today I'm joined by several members of the Ecolomondo team, including but not limited to Eliot Sorella, Chairman and CEO, JF Lebay, COO, and many other members of the team. We'll all have a chance to introduce ourselves further in the presentation. This presentation will be recorded and posted online for replay purposes. Please note that this webinar will contain forward-looking statements. For the full disclaimer, please refer to slide number 2 of the presentation. Please be advised that Volt Strategic Partners is not a registered investment advisor or broker-dealer, and more information can be found on our website at voltstrategic.ca. We will be hosting an open Q&A session at the end of the presentation. If you're not a member of the Ecolomondo team, we please ask that you keep your mic muted and camera off until the Q&A session. And I will now hand it over to Eliot Sorella and JF Lebay.
Well, to everybody, Eliot Sorella here. I'm very appreciative that everybody's taking the time to listen to what we have to say. I hope that our meeting will be interactive, where you can ask whatever questions, whatever concerns you have. It will be our pleasure to give you an update and to explain in full exactly what we're doing and what we're going to do. So we'll start with a little bit of an explanation of the deck, and Colby will take over, and then Jean-Francois will proceed to explain a little bit of the details of the historical information of the company.
Absolutely. Thanks, guys. Use a forward-looking statement disclaimer, as I noted before, and we'll hand it over now to JF.
Thank you, Colby. Thank you, everyone, for your time and for being here. Basically, the overview of Ecolomondo. It's a Canadian clean tech company that has developed a proprietary waste-to-products technology. As opposed to waste-to-energy, we produce products. And we're now commercializing this technology by building and operating plants based on this pyrolysis technology. The company started about 25 years ago, and at the beginning, of course, for many years, it was an R&D company, and it was purchased in 2008 by Eliot Sorella, our current president and CEO. And Eliot invested substantially for many years, patiently, and the goal was to complete the technology and make it ready to be commercialized. And that was the case a few years ago when we became a public company, publicly traded on the Toronto Stock Exchange Venture market in 2017. Since then, we've been preparing and working on our first plant, Augsbury, that we'll discuss some more in details in a few minutes. Today, we can claim that we are among the world leaders in this industry. We have strong partnerships, strong credibility, and we are becoming a global vendor and operator of TDP facilities. We refer to TDP often in this presentation. Not yet, Colby, please. I'm almost done with the first slide. TDP stands for thermal decomposition process. We decompose tires or other material based on hydrocarbons, and we decompose those tires back into their original components: steel, oil, and carbon black. Carbon black has the greatest value. It's not very known in the public, but we have carbon black all around us. If you have black plastic, it was colored with carbon black. And more importantly, if you have a rubber product, such as tire, anything that is made in rubber, has carbon black in it. It's a key ingredient to produce rubber. So in a few words, Ecolomondo sells and operates TDP plants, and those TDP plants will sell end products, which is steel, oil, and carbon black.
Just to add a couple of points to what Jean-Francois has mentioned. When I took over the company, and we worked for many years to achieve all the necessary deliverables and goals that we set to make sure that our technology was robust, And the products that we generated from the tire waste were products that were readily acceptable by industry. When we took the company public, we had already achieved all the deliverables and the goals that we had set. And the reason why we went public was to set the stage for our global expansion, to make sure that we had ready capital when we needed it, and be able to achieve the goals that we set. And we are today, I can tell you that that is exactly what we are doing. We're just at the doorstep, but we're ready to move along, and that's why we went and we announced another plant besides the plant in Coulter and Hawkesbury. Now we announced another plant in Texas, which sets the stage for our global expansion. Go ahead, Joe.
Okay.
Thank you, Eliot.
This second slide is about the recent progress of Ecolomondo. And if you, when we look at it, it's basically the most recent press releases. There's a lot of recent progress and there's a lot of action. Whoever knows Eliot knows there's a lot of action around him. So recent progress, this list again is based on the press releases. So it's the key events that we had to publicize by being a public company. So the first two are about the project in Shamrock, Texas that Eliot was talking about. And I believe we have online our partner for the Shamrock, from the Shamrock Economic Development Director, the fabulous Crystal Hermes-Meyer. So she's great, and we are so impressed. It's going great. That's in that project. The next line, the third one, is the Augsbury facility, only weeks away from operations. We'll come back in more details, but Eliot was proud to say this week that we officially started the commissioning, and we'll talk more in details in a few minutes about that. Also, we appointed Suzanne Desrosiers to the board of directors. She's the CFO of a large tech company based in Montreal. They are throughout Quebec, and she's been a great addition to the board of directors, which is very highly qualified people. Before that, we had launched Ecolomondo Process Technologies. Again, we'll talk about this in a few minutes, so I won't bore you with details at this time. And prior to that, we secured a multi-year tire feedstock agreement with Recyc Quebec. That's for the Augsbury plant. Just to put a few words around that, Augsbury is almost ready for operations. So we have secured the feedstock. In fact, there's more than enough feedstock that we can handle, both from Ontario and Quebec sides. And also, we are working on the selling of the end products, recruiting, and putting all this in order so that it will be all ready to kick off within a few weeks. So the headlines on the Augsbury TDP facility, you'll have a few pictures in a few seconds. But basically, the mechanical installation is fully complete. The electrical installation is almost done. We ran some tests already, and the inspection already started, and we had preliminary passes. We are finalizing the commissioning order for each of the motors and pieces of equipment. And as mentioned on this slide, the carbon black line is being commissioned next week. So there's basically, just to give you an idea, and I'll let the next slide give you more details. But basically, we have 4 departments. I'll go in order of processing. The first one is tire shredding. So we shred the tires into small pieces of rubber, during which we extract the steel and other contaminants that may be in the tires. We take that rubber and we put it into a reactor, which is the heart of our technology, thermal decomposition process. And that decomposes the rubber into oil, carbon black. The oil is processed in a specific section of the plant, and the carbon black is refined to become a very high quality end product, as Eliot mentioned a few minutes ago. You know, the key thing about this is to not only to produce the end products, but to have end products with which we can maximize the value. That's what, you know, it increases the bottom line, and it gives us more bang for the buck.
Thank you, Jay. So now we're going to hand it over to Lawrence Culliford, the end product specialist. We're going to be showing you some images from the facility, and he'll go into greater detail on what you're seeing. And there you are, Lawrence. You should be good to speak.
Good day, everybody. Thank you for joining. I mentioned that the Ecolomondo started over 24 years ago. I've been around this project, I would say, for the last 23 years. So I kind of started with it in its infancy. And it's really evolved amazingly from what it started as and what it is today. And you're looking right now at the top left, you have a view of the shredding line, the primary shredding line. This is where the whole tires come in and they start getting broken down into large pieces. And then they enter into the middle picture, which is for one of the raspers that's acoustically isolated. You know, one of the major things that we have here is safety, and also worker safety, because it's a very loud chamber, as opposed to this not being outside, it is inside, so we can work around the clock. You have sound abatement and to keep the noise levels down so people can actually work 24/7 without risking their health. On the bottom left-hand side, you've got a view of the carbon black treatment line, which finishes off the product. On the right-hand side, you've got a 5-day storage tank that holds the crumb rubber. It's 10 mesh crumb rubber. It's like the size of a grain of rice. The tire is literally brought down from a whole tire down to our key ingredient, which is what goes into the reactors, and it's a very small size rubber, no steel, no fiber. The fiber's removed, the steel's removed, and they're sold as products on their own. And then it gets set to go into the next phase of the reaction. Next slide, please. Yeah, this is a view of the control center just for the shredding line on its own on the left-hand side. It's quite an amazing feat to see a tire become within 3 minutes. It comes in as a whole tire and it's turned into crumb rubber, steel, and fiber, ready for processing. You've got a view of, on the right-hand side you've got the front view of the money-making portion of the business, the biggest money-making portion, which is the bagging solution. It's the end of the carbon black treatment line. This is where everything ends up, okay? It goes from whole tire to rubber into oil, gas, and carbon black through the thermal decomposition process. The carbon is brought into a storage tank in the back. It is milled down to between 5 and 10 micron, very fine powder. It gets beaded into a 1 millimeter bead and dried, and then bagged in that loading station. Next slide, please. And of course, the Shamrock project on its own is, I want to make a mention before about the quality of the products. In the carbon black world, there's a 3-tier. There's tier 3, which is generally very dirty, very oily, not milled, not processed, and has very low value to the market and very little request. Then you've got your tier 2, which is a good quality product carbon, but it's not milled and it's not pelletized. And then there's tier 1, where we fit. No odor, finely powdered, properly loaded into beads for the market requirement, and gives you your maximum value for the market. Okay. And then the oil becomes either a single unit, a low, what we call a light oil, like a naphtha. Then we have a medium range, which is more like bunker fuel, and we got a thick component, and we can fractionate this to the components that the customer needs in the outside fractionation system.
So, Lawrence, if you just, so what you've seen here is the latest technology in pyrolysis technology. This technology was developed by Ecolomondo, and there was over 100 proprietary secrets in this particular technology. We actually did not show you the thermal part of the technology because it's quite secretive and it's something that we don't really advertise. The plant in Hawkesbury is state of the art. It has the largest capacity in the world of production of recycled carbon black. Every pound of product, of waste, creates 1 pound of product. We have absolutely no residue in our technology. We even recycle and reuse the water. Colby, let's move on.
Yeah, absolutely. So, so now, you know, Eliot, if you want to give a summary of the Shamrock facility, you know, obviously that was a recent press release, something that's very exciting for you and Ecolomondo. So, you know, we want to go in and talk a little bit about the facility and some of the revenue and EBITDA estimates as well.
Sure. So Shamrock is something that Ecolomondo and its team have been negotiating for well over 2.5 years. And during the period of 2.5 years, when we selected the Shamrock site, there was a specific reason why we selected. We took into consideration feedstock. So we were able to find this location where within a very, very short radius, we're almost touching 5 states. We took into consideration tipping fees and obviously manpower. And we found a partner in Shamrock that was willing and actually saw the vision of Ecolomondo and what it brings, not only in economic benefits, but in environmental benefits. And we were very fortunate to get their cooperation. And today we can safely say that we're well on our way to this project. We actually have meetings every single week with the people from Shamrock, our lawyers, and down there, and everything is according to schedule. And we're working, and we believe that this plant should be up and running sometime in towards the latter part of mid to end of 2023. And once this plant is up and running, and it will produce, it will process roughly between 5 and 6 million tires a year. It will, without a doubt, set Ecolomondo on a footing for a global expansion that's unprecedented.
Thank you, Eliot. Thank you for that summary. So now we'd like to highlight Ecolomondo Process Technologies, and Eliot, I'll let you introduce.
So the reason, as we built the plant in Hawkesbury, we received a lot of experience, and we've learned from a lot of the deficiencies that were brought to us by our subcontractors. So we decided that going forward, we wanted to lean less on consultants and less on engineering companies, because they're the ones that make the mistakes. It's not the people that are manufacturing the machinery that's making the mistakes, it's the people that are designing them. So we decided that we wanted to circumvent and avoid these issues. So we decided to put together our own engineering team. While I was discussing that, I realized, and I met this gentleman called Ali Alizadeh, And he sold me a vision on other products that we can sell. Not only could we do the engineering, but we can also add and offer additional products that are always within the mainstream of the environment, and which also complement Ecolomondo. So I'll give Ali was kind enough to speak at this webinar. So I'll give the podium to him, and he can explain to you what his company does. And this is a wholly owned subsidiary of the Ecolomondo Corporation, and which all of you as shareholders share into.
Thank you, Eliot. And yeah, we'll hand it over to Eliot Sorella, Chief Technology Officer of Ecolomondo Process Technologies.
Thanks, Eliot. Hello, everyone. Thanks for your time. As Eliot explained, the vision for Ecolomondo Process Technology was expanding Ecolomondo's activities to an environmental company, not only in tire shredding and processing. So there are many opportunities right now in waste management, in biogas operating, CO2 capture, and hydrogen extraction that is very related to the process that Ecolomondo is doing, dealing with landfill and with people who are active in the environmental sector. So Ecolomondo Process Technology, the first mission, as Eliot explained, is performing engineering and supervision project management for Ecolomondo next upcoming tire shredding and tire processing process. Besides that, we are active in biogas operating. We have access to technologies for gas treating, desulfurization, CO2 separation, nitrogen separation, oxygen separation, whatever that is related to gas cleaning. And currently, we quoted almost $10 million projects in biogas operating and gas cleaning, and we are hoping that to secure a few $1 million in 2022. So beside that, since we are producing syngas from our reactor, we also are active in hydrogen extraction process. So currently, companies are approaching us from US, from Singapore, from Australia to perform hydrogen extraction from syngas, which is produced through gasification and other processes. So I'm pretty sure you will hear a lot from Ecolomondo Process Technologies in next upcoming months and year, and there are many opportunities that we want to explore.
This is Eliot again. I have to say that Ecolomondo Process Technologies in its first quarter actually generated revenues and actually made a profit. So that particular division is well on its way to being, in my opinion, a huge success and to the benefit of all shareholders. The benefits that this division will bring to Ecolomondo are enormous, and they will translate into lower costs for each plant, and keeping in mind we build and operate. So this will reduce the amount of capital required to build them and will enhance profitability for each plant.
Perfect. Thank you guys very much for that summary. We're now going to move on. Eliot, this is all you.
Well, as you know, I hate to be in the spotlight, but I'll do my best. So when I purchased Ecolomondo, I actually saw the vision from get-go. If once you visit these plants and you see them operating and you're taking literally waste and turning it into something of value, it's got to be a winner. Ecolomondo is a huge winner. Yes, it took a lot more money than what I thought at the beginning, but the only person that took the risk was myself, because I believed in the technology, and I believe in the success of Ecolomondo. I would not have gone public if I didn't believe in it. And so I have a vision. My vision for the company is very simple, okay? Is to build these plants and make money from them. As I was going along, I realized the money is not in building the plants. The money is in operating them. And when you sit down and you look at it, you realize what? You're taking feedstock year after year, because the feedstock is generated year after year. And on top of that, you get paid to take them. So we're getting paid to take them, and then we sell the product and make profits from that. So I mean, this is a win-win situation. So my vision, as I progressed over the years, was to build these plants and operate them. The money is in operating the plants, and Ecolomondo Corporation is extremely well positioned, being today the industry leader, not only technologically, but our business plan and our growth strategy is unprecedented. And if you look at our achievements, there's not one deliverable that we set either technologically or financially, if you want to call it that we haven't achieved. We achieved all the technological goals, then we decided to build a plant. We could have chose to water down or dilute the shareholders, or build this plant with debt. We chose debt. The shareholders did not get diluted. We built our plant. We're on the verge of commissioning it. Well, it's being commissioned as we speak. And we're setting the stage now for our global expansion. So we're in a great position, not only technologically, but also our growth is going to be unprecedented in the coming years.
Thank you for that, Eliot. And you know, we have on here, obviously, you know, we've just announced the Texas facility there. Can you speak to how active the company is on negotiating other facilities?
When you're the industry leader, and I have to with pride, I have to say that Ecolomondo is one of the finalists in the Recircle program for innovation. So if Ecolomondo wins this prize, we will be known throughout the world for technological advancements when it comes to processing end-of-life tires. The way we see this, our market potential and our expansion, we're not, our curve is not flat. It's actually very steep. And as we go into it, and with the support of our partners, we are going to build plants throughout the globe. We are currently negotiating for more plants in the US. We the way Ecolomondo markets its plants, it's not that we're selling our plants. What we do is we select. We select where we're going. After we've done our due diligence, we analyze feedstock, tipping fees, labor pool, and we select. And when we select, we approach the local authorities and we sit down and we talk to them. And in most cases, we explain to them, so listen, we're going to build a plant here, whatever this plant size. If you take the economic benefits, the multiplier effect of the dollar, et cetera, we go into a place, it's a win-win situation for everybody, because we are able to get, I won't use the word concessions, but grants and whatnot that are in place, and we're able to create economic benefits for the region that are unprecedented. So everybody's in a win-win situation. So we're able to control our expansion. We're able to say, okay, we're going to build 5 plants this year, or we're going to build 50 plants this year. Because our partners are all local people, and we encourage the locals. And with EPT in place now, we're able to do that. And I'll explain why. Our technology is modular. It means the size of the plant we don't have to re-engineer a new plant. If we want to build a 2-reactor plant, then it's 2 reactors. If we want to build a 4-reactor, we just add 2 more modules. We want to build an 8, we add 4 more modules. So we're there. We can build as many plants as we want. And in this way, we are able to expand and go way beyond our competition, who are saying what they're going to do, and we're doing what we're saying.
Absolutely. No, thanks for that summary. And definitely it's, can't stress how important EPT is to this growth strategy. We're now going to open the floor up, guys, to a question and answer period. This is an open period where you can and pretty much ask anything you want here, and we'll answer it to the best of the ability. We have a first question here, Eliot. Do you guys have any internal estimates on the carbon credits or carbon offsets created from these facilities?
We have not factored into our business model any carbon credits in North America. The reason being, carbon credits are still political football, and we at Ecolomondo do not want to base our numbers on hypotheticals. We want to base our numbers and our projections on reality. And that's why we have not factored in. We understand also very clearly that in Europe, carbon credits are a major source of revenue for environmental clean tech companies. Here, we're not there, and we have not factored any carbon credits in our business model. Our revenues do not include any for carbon credits. If they happen, it'll just be, a little bit more butter on the bread.
Thank you. Thank you for that. Next question here from Ryan. Has Ecolomondo thought of hiring a market maker or any other means to increase the liquidity?
So let me ask you, is Ryan a market maker?
No, Ryan is not a market maker.
Okay, I'm only kidding. So this is what my take is. I understand that, and it's very frustrating to me that our stock is at the level that it is. And I don't understand it exactly, because investors today do not invest in the value of the company. They invest on the potential of the company. Now, Ecolomondo has tremendous potential. It has a forward-looking expansion that's unprecedented. The company, not to give myself an accolade, but all my team is extremely well managed. We conserve cash to the benefit of the shareholders. We went public 4.5 years ago. 4 years ago when we did our raise. 4 years, we did not go back to market. So we've been extremely vigilant in ensuring shareholder value. A market maker, we've had market makers in the past. When the time is opportune, and we believe that a market maker will bring value and enhance the value of the stock price, we will be there. In the meantime, we are exploring all opportunities.
How many plants can Ecolomondo build per year?
We can build as many plants as we want. The thing is, each plant takes time, and negotiating right now, we're negotiating with people all over the world. Australia, United States, Dominican Republic, South America, Europe, England. So everything takes a little bit of time. But as we embark and we decide, we're deciding right now on 3-4 sites. So once we've completed all of what we want to do, okay, in these sites, ensure feedstock, ensure cooperation from the authorities, selecting a site or whatever, making sure that, sites, you don't go, it's like building a building, you're processing waste. You got to have a very, very specific type of land, and it's got to be in a certain area, whatever, and, so, and at the right price. So we're doing all of this. So to build, just for the sake of building, we can build as many as you want.
Perfect. Solid question. So next question here, are these plants able to handle heavy hauler tires, and would the oil sands be a suitable location for a plant?
We can handle any type of tires that are out there, because we cut down the tire to sizes that will feed into our system for shredding. So we can handle any type of tires. We've already looked into, we already have supply. We have an agreement for 1,000 tons of mining tires with a substantial tipping fee. These are all things that we have in place. We don't announce everything for the sake of just announcing, but we have in place. The same thing, all of the, I'll digress a second. Everybody calls me up and says, "Oh, do you have any offtake agreements?" What do you mean by offtake agreements? Do we have customers? Yes, I can tell you we have customers for our oil. We have customers for our carbon black. We have customers for our steel. We have customers for everything that we produce. So we can handle pretty well any type of tire, to answer the question. Next question, Colby.
Perfect, thank you. in terms of, obviously with the Hawkesbury facility, there was a pandemic thrown into the middle of it, so that complicated a lot of things. But how long is the estimated commissioning for facilities, and what is basically, do you guys have an internal timeline from when you finance a facility, you get the permits, and then it's spitting out money?
Well, that's a few questions. So one question is, and when you're sitting down and you're negotiating the sale of a plant, that takes a certain amount of time. Once a decision is made, like in Texas, things go very, very fast. So we are building a plant is, depending on the size, is anywhere from, and because it's modular, and because we have all the engineering plans, and for each module already, so we just keep adding modules. So right now, we've reduced the amount of time. Hawkesbury took longer for two reasons. We started from scratch, and secondly, we were faced with a pandemic that was there for 2 years. And all of that, the only thing that was fixed was the loan. You don't go back to the bank and keep renegotiating because of a pandemic. Banks don't want to hear that. So in Hawkesbury, we were fighting all of these obstacles and also working to maintain the budget. So I can tell you with pride, okay, we still did it in record time, taking into consideration shortages, pandemic, labor supply, labor shortage, parts shortage, logistics problems. We've done it. We built the whole plant during a pandemic. People are calling me all the time. Oh, when are you going to commission? We're commissioning. We're doing. The plant is finished. It's ready to go. But there's regulations. You call up an inspector, it takes him a month to come there. In the old days, it used to take him 2 days. So we're faced with all these things, but we're making do and we're there. So building a plant, you're looking at 1 year, no matter what the size. Obviously, we love the larger plants because the economies of scale benefit us, but we'll also sell the smaller plants because we still make profit, but we also believe in the supply that we need to offer. When Colby, you tell me if I'm long-winded, but these are all important things for the investors to understand. Okay, the profit in the expansion in this industry is in having large quantities of quality resources that will benefit the circular economy, because everything is finite. So if you recycle, okay, you're bringing it to infinity.
Yep.
And that's what Ecolomondo does.
Absolutely, absolutely. No, we totally agree with that investment proposition of the circular economy and the growth perspective. Can you comment on any, how many prospective clients and or partners are you currently negotiating? Or could you put a prospective figure on the number of plants you're in negotiation phase? With the caveat that not everything that you talk about, not every plant you talk to or stage of negotiation you're in results in a plant build.
Well, Colby, if I would answer that question and somebody from the authorities are on, I'd go to jail. So all I can tell you is that Ecolomondo is extremely active on many fronts.
And thank you for that. And yes, obviously there's a certain limit to disclosure. As far as do you guys have I know we already kind of touched on this, but is there any roadblocks to the speed of expansion, or is that something that's manageable as you guys grow?
That's a really good question. My compliments to the person that asked it. So this is what it is. There's no roadblocks. Supply is insatiable. Feedstock is insatiable. The market is ready for all recycled products. The roadblock is we need the money to get there, not the building of the plants. I think we can achieve financing those plants. I mean, we've done it we've done it in Hawkesbury, okay? We're doing it in Texas, and we'll do it everywhere because our business model, the way we do it, and to conserve capital, we bring in joint venture partners in every deal that we make. Ecolomondo keeps 55 at a minimum 55% of the control of that plant. So it always translates into our consolidated statements. So we're always in a win-win situation. So because we bring in joint venture partners, we bring in a joint venture partner for this one, we now have a threshold to go for the next one, and the next one, and the next one, and the next one. And I can tell you, so far, we've had no issues getting joint venture partners.
Perfect.
So that is what is our model. Our model is to control the resources, vast amounts of resources, where we, in the circular economy, will be able to take advantage of being in control of our situation. Everybody asks me for an offtake agreement. I'm not signing offtake agreements, so I can't announce them because I want 20 customers for my carbon black, not one. So that's my mantra, and that's the way I see it, and that's the way I believe in the company, and the shareholders should respect that I'm actually protecting their interest by not selling and not depending on one company for the sale of one product.
Yep.
Okay, it doesn't make any sense. So that's my area of expertise. I'm a businessman. I have a lot of experience, and I understand you control your own destiny, and that's what Ecolomondo is doing. It's controlling its own destiny, and we're going to build many of these plants, Colby.
Thank you for that detailed summary, and I totally agree. Can you comment on the payback period for these facilities? Yeah, EBITDA and also cash payback period, if you have those numbers on hand.
Look, I don't want to get into specifics. EBITDA is dependent on the size of the plant. Profitability is dependent on the size of the plant in terms of percentages. From the smallest to the largest, they're all profitable. So payback will average anywhere from 2 to 8 years, depending on a facility of 2 to 8 reactors, or 8 to 2 reactors. So that's what I'm ready to say. EBITDA is exceptional. We're processing waste. We're getting paid for waste. Everything translates into EBITDA. Okay. Bottom line is it's unprecedented. Now, I don't want to come across with foolish numbers and whatever. Let the plants prove themselves. I can tell you that Ecolomondo Hawkesbury, as it starts to generate revenues, and it's at 80%, 75 to 80% efficiency, will do well. And payback for Ecolomondo Hawkesbury will be a little longer because our capital expense in that plant, because it was first of its kind, was a little higher. The next ones will be a little bit lower, and payback will be a little bit better. So I don't want to get into specifics because I don't want to commit to anything, but I can tell you based on everything that we've seen, the market is ideal. Oil is at an all-time, not an all-time high, but it touched $90 a barrel. Okay, and I have to tell you, we're selling our oil for more than $90 a barrel when it was $75 a barrel. So these are the kind of things. Carbon black is unprecedented. Demand is, population explosion. People are buying more products, consumer products. It all takes carbon black. It all, carbon black is a resource that is so polluting that every time somebody buys something that says recycled carbon black, they should buy it because they're actually helping their own, environment. So I don't want to really, I can tell you that each one of these plants do well.
Yep.
The bigger, the better.
Perfect. Thank you for that summary. Great question here. What is the #1 risk facing Ecolomondo?
There are risks. Over the years, I've done everything to mitigate the risk. I funded Ecolomondo myself for the better part of 10 years with a burn rate of 100,000 to 200,000 a month. Is there risk? There's always risk. But I can tell you, I have done what no other entrepreneur will do. I've taken the risk. So all I can say is I've mitigated the risk for the investors, and I will continue to do so. And in being so close to commissioning of the Hawkesbury plant, I would love to tell you that it's done, so, okay. So,
Well, thank you. I think that's a totally accurate summary, Eliot. And there's not, I'm not invested in very many public companies that, the largest shareholder, the CEO and the chairman has invested $20 million of their own money in to take all that execution risk. I think we're at, there's a number of operational risks as you guys expand, but from a risk perspective, you shouldered all of that risk early on for the shareholders' benefit. We don't have
I do want to make, Colby, I do want to say one other thing.
Yep.
Is most of it was not a loan, it was capital injection.
Yep.
That is belief.
Yep, absolutely. Totally agree on that point. Folks, we're nearing the end of time here for today's webinar. If anyone has any final closing questions that we can address quickly here, please enter them into the chat. If not, you can always email me any questions you have. If you ever want to set up a call with the management team, that's also an option too. I'm going to put my email here and everyone can, any questions you guys have. Joint venture, preferred financing method, or debt where possible. So there's two questions here and then we'll close it off. So for the financing of the plants, the joint venture partner and yourself are injecting equity, and then you're using that to then secure debt financing. Is that correct?
Correct.
Yes, thank you. So can you retrofit new facilities with, like, for example, if you have an industrial space, would you be able to insert the equipment into that existing space, or are you able to, do you have to build a new plant every single time?
We obviously we have certain criteria that are the minimum. It depends on the area. If it's here in Hawkesbury, the weather is like here in Montreal, gets a lot of snow, very cold, etc. You have to take all the necessary precautions. So so the cost of the structures was extremely expensive, almost $8 million for Hawkesbury. If you go to a place like Texas, where the weather is not as severe, the cost to build, we're projecting 120,000 square foot building in Texas. So and the cost is maybe going to be similar to what it was in Hawkesbury. So we can adapt, but there's certain minimums that we have to respect to make sure that we respect all the guidelines of the technology, making sure that the tanks are high enough, there's room and clearance in the building in Hawkesbury is 31 feet. So we need a building that's a minimum of 28 feet, etc. There's certain criteria we have to respect. So not all buildings are adaptable. Some maybe will be.
Yeah, I think it's as with anything, if it's purpose built, it's easier than retrofitting. Generally building the plant, Logan, there is probably going to be the easiest way to do it. And then kind of final question, and Adam, I'll follow up with you just because we're kind of out of time here. But Eliot, how long is Ecolomondo's general working capital runway with the current funds in hand?
So I have a philosophy. I'm a little bit old school, but I'm very, very dynamic in the way I achieve. So when we originally went public and we did a reverse takeover, we had roughly $2.8 million in cash. That lasted 4 years. Obviously, with our ramp up and going forward, we might need some extra funds for Hawkesbury. I figure at the current level, we have enough cash probably go for another 1.5 to 2 years at status quo. Now, if things happen and things change in business, but if taking into consideration today, and if we freeze today, we a few years probably. Our burn rate is exceptionally low because most of the people that work in management, for example, myself, I do not take a salary. I work pro bono because I believe in the company. So that conserves cash to the benefits of the shareholders. Because they don't get diluted. If you look at all of our competitors, you will see a lot of the founding people end up owning single digits of the company. And I hold the company very, very close. So.
Absolutely. No, thanks for that summary, and thank you everyone for joining today. As I said earlier, this is going to be posted on YouTube for a replay. So feel free to share with your network, and we'll also send a follow-up email with this presentation. That's pretty much the end of it. And yeah, if anyone has any follow-up questions, feel free to reach out to me, and we'll discuss further. Thanks everyone, and yeah, that is the end of our session today. Eliot, I will let you say your closing remarks.
Well, again, it was really enjoyable. I think we should have more of these, Colby, because I believe, that shareholders who have invested in the company have every right to know what they invested in, and they have every right to evaluate their risk in their investment. And I will always, and if you look at our press releases are not a hype, they're informative. We tell the shareholders or the general public, if you want, exactly what the time of the day is. We don't tell them what the time is going to be. We tell them what it is. And I take great pride, and I mean great pride, in the ethics of the people at Ecolomondo and to the level that they safeguard shareholder value. Everyone, whether it's on the board, at the board level, at the employee level, at the management level, strive towards that goal. So that being said, I thank each and every one of you for being on this call, and I look forward to our next one. So you can ask me whatever questions you want, and I'll be more than happy to give you the right time update.
Perfect. Thanks, everyone. Hope you all have a good rest of your day. Thanks, Elliot and team.